Hey everybody, it's Adrian Zdunczyk, CMT Charter Market Technician, Crypto Birb. Welcome to yet another extremely interesting episode of our Hidden Revolution series for the RWAs, because this is pretty much a hidden revolution. RWAs are changing the world. However, they are doing this fairly quietly through the hands and means of extremely talented founders, people, C-level executives right there, and very, very big brands. And such are on today's session as well, joined by CEO of Nomad Fulcrum, Paweł Łaskarzewski, and Jing of incredible Solv Protocol. Welcome to today's show. How are you feeling, gentlemen?
Very good. Beautiful day. Everything is working perfectly fine.
How about you, Jing?
Excited to be here. Firstly, thanks for having us. Definitely want to share more, talk more, discuss more, and really hear the opinions of everyone.
Beautiful. Right on. And of course, we have a couple of points out the agenda. However, I wanted to give a brief appreciation as well to Paweł, for having been in the space for so many years, having seen so many of the trends developing. I think it's such a spot on discussion to be had at that time, on the RWAs, right? Because Paweł having now stake on the Nomad Fulcrum, the tokenized hedge fund, at a Swiss-based license that I'm an equity holder for. Again, full disclosure there. I'm involved as well in the project. However, it is very nicely paired with Solv Protocol, right? Because it comes, Jing, with your ex-TradFi experience of 10 years, basically across options and structured products, right? So where's the Solv Solv Protocol product kind of like orientation right now? Are you guys focusing only on the RWAs or kind of like also other fields before we head into the main discussion?
So the way we see it, so what Solv Protocol does and what we do really is just why we, as much as possible, try to generate returns and generate yield for BTC holders. Historically and traditionally, a large part of these things tend to be deployed across DeFi, across CeFi, and across the crypto space. But increasingly, we have seen both a demand and both an integration into your more traditional sectors, and that's where we broadly use the term RWAs, where a lot of the deployment and investments happen in assets outside the vanilla crypto space, leaning a lot on traditional financial rails. So I think these are stuff that we see a lot of potential for growth, not just for the next 3 to 6 months, for the next 3 to 6 or maybe even 10 years, right? I think we're really just at the beginning of this portion really taking off.
If we take a quick look actually right over here, for what sort of like problems we're always trying to solve, with the help of our WAs, right? We're talking about securing assets with other assets of the same class, or different class. We're talking about bringing more liquidity, right? Solving the liquidity problems, solving the regulatory problems that are right now, also with the help of MiCA regulations, are being solved to a large extent. And all those emerging technologies, all those emerging trends, those key innovations, that happened, they correspond with those key problems, right? So what's your stance, Paweł, on how we are actually trying to change these yields that are based on printed token or of leverage positions?
So like one of the problems that we face in crypto right now is the problem that traditional market doesn't have, which is liquidity issue. And this liquidity issue is leading us to many different issues that we have in the space. And in my opinion, combination of traditional market liquidity together with all the solutions that we have in crypto, so RWAs can be a perfect combination, because just to provide one example, in crypto, we don't have a problem of tradability from 5 to 9 to 7, to 5 p.m. daily, right, on stocks, or 24/5 a week on other assets, because after that the markets are closed. We have tradability 24/7, so that these assets can be used in various different ways as a payment method. So for example, using Bitcoin, you can buy a grocery store, right? It's possible because the liquidity is there, and access to that liquidity. So I believe this perks that crypto and blockchain is bringing to traditional market And combination of that liquidity from traditional market might bring a tremendous results. And in my opinion, that's going to be next big trend for the next like 1, 2, 3 decades. And the approach that many people are still trying to protect and fight for in crypto is let's stay fully in crypto, like let's do only crypto stuff. And I believe that kind of approach is not good, because today you can see that, for example, that majority of the DeFi protocols have not liquidity but scalability issues. They cannot scale beyond like 100, 150 million TVL because the yields are going down, because then they become the order book and they play against themselves, etc., etc. So there is a lot of elements that might be solved by combination and by operating on the intersection of traditional market and a crypto market and blockchain market, but that needs from the market to tokenize assets. This traditional market asset needs to be available on chain, because, for example, in our case, we are running hedging strategies, delta neutral, market neutral, AI quant strategies that execute hundreds of thousands of transactions per second, that execute billions of dollars monthly volume. And we can't do this in crypto because these assets in crypto don't have liquidity. This is one thing. But the second problem is that there are no traditional market assets that we can trade on that have all the liquidity of the world on chain, right? So like right now, we've seen announcement from Ondo Finance, and I had like called yesterday with the team that they will tokenize US securities on chain, right? So this kind of movement will happen, but it's not going to happen over the night, over the week, over the year. It's going to happen over the next decade. And I believe this will make us closer, not to speak anymore about crypto blockchain market and financial market. It's going to lead us to the place where we will start speaking about the new financial markets, and that's it, which is going to be the combination of the best from both.
Jing, do you have anything to add on top of it?
I think Paweł raised many legitimate and many good points. But if we take a step back and see where we are, right now where we have ETFs, Bitcoin ETF, Ethereum ETFs, and multiple ETFs. What does that actually mean? That means that many of these assets in this space is starting to get legitimacy, right? For many of the holders in this space, if you talk about traditional Bitcoin holders increasingly, if they see it as gold and digital gold in the traditional sense really doesn't get used for transactions. You don't use a bar of gold to buy and sell something, right? It's a store of value, number one, and it's a store of value used to be borrowed against. So if we think about it in Bitcoin terms, increasingly, you're going to have BTC or E as collateral for many assets, and that's really the starting point. Users don't really want to sell those assets. So that's why when we talk about RWA, it's not just about, in my view, bringing assets on chain. It's about the entire financial infrastructure, the entire financial rails, right? How do you actually integrate where you can use many of these assets for borrow, for lending, for wealth management products, right? And as we expand into those space, I don't see DeFi or crypto existing exclusively by itself, right? It's a much more how is it going to be integrated into traditional finance worlds, and that's how we see the next few years going, and that's how we see the current direction the White House administration is going as well, right? So from a lot of those perspectives, we feel like there's a lot of enthusiasm, there's a lot of optimism in the space. And then back to a more micro picture, when we talk about a lot of tokenization of all these assets, I very much agree. In crypto, it's 24/7. It's always there. You can always be transacting, buying, sending, selling various assets at any time of the day. And I think a lot of that a lot of those benefits are very much underappreciated. So when I combine a lot of these things together, right, like I think that together with what you mentioned, is where we are at right now, and there's a lot to look forward to.
Correct. And even thinking lately of the recent, NASDAQ announcements, right, that they're going to open up the markets 2026 onwards into 2020, into 24/7 actual mode as well, just like crypto, right? There's no actual reason anymore. I think in the 21st century, to keep the assets floating only 9 to 5, 5 days a week, it's a little bit ridiculous, especially since we've already had, for 14 years and counting, assets such as cryptocurrencies that are making it so much more liquid. And yet, of course, having a little bit of fluctuations between 2.7, 3.7 market cap, it's still nowhere near where it can be, and RWA is an integral part of that, it seems. However, one of the concerns, that I think we should address is the lack of stability and the high volatility, right? So how can RWAs actually address this, Jing?
So the lack of stability, or in other words, volatility, is always going to be a function of markets, in this case, newly emerging technologies or newly emerging markets. Although I wouldn't say we are newly emerging per se, but compared to traditional finance and equities, we are there. So I think that's will be here to stay for at least some time until it gets a lot more institutional in nature, in terms of adoption, in terms of holders and stuff, right? So that's going to be there. But that's also one of the reasons why probably people are attracted to this space. And then secondly, how does RWA actually fix this thing? In my view, I feel like RWA is a path for a lot of these assets to go in mainstream adoption. And when that happens over the next 1 year, 5 years, or 10 years, the expectation is that because the holder base changes gradually from shorter term holders to much longer term holders, where people are actually holding this for a store of wealth, then over time, you're probably going to see decreasing amounts of volatility. So that's my 2 cents on this.
Yeah, I mean, I was thinking quietly, a little bit over it, right? Because I understand and I agree that it's a matter of time for any emerging new asset basically to calm down over the time, simply because as the market grows, and assuming there's not an infinite amount of money pool that you can print, right? Moving all the printers aside, bringing a little bit more efficiency in the rational in the market, having this limited pool of money, having this limited liquidity. This means that there's going to be engaged more and more people, more and more money. And I always compare it, on a parallel to like a speeding truck, right? The bigger the truck load is basically that it's carrying, the harder it is, even from the second Newtonian law, basically of dynamics, just to move it, to push a little bit more force into the acceleration to be generated, right? And once it actually stops, once you even take the foot off the pedal, it's still going to keep going just on the impetus itself, just on the momentum, right? Just on this inertia of this internal load. So the bigger it grows, the more difficult it is to steer this, right? The more difficult it is to kind of like maneuver chaotically into this, and hence, as a result, the more stable it becomes. So I agree with you, Jing. However, it still doesn't represent one of the concerns, I think, that the RWAs have, or the actual regulators may have. Paweł, so from the regulatory perspective, having Larry Fink talking about this again, tokenization of stocks and bonds and assets, of securities as the next generation, do you think the regulators are going to catch up? Do you think that they're going to actually take the lead? Is it something that they can pave the way for, or are they always going to lag like they always do?
So, yeah, they always do. We've seen this like forever. So that's the first thing. But they cannot step in. Usually, regulators cannot step in too early to regulate industry, because that will kill the industry. We've seen this in 2000 during the dot-com bubble. You need to allow the industry to make mistakes, even to scam people, unfortunately. But it's a part of the progress. It's a part of the development. If you would put regulations at the very beginning, imagine what would have been created. Nothing. Like nothing would have been created. No protocols, because from the day zero, you would have to force users to do KYC on the DEXs. It's not possible, right? So no one would start using that. No one will speak about the freedom of use of crypto, of blockchain, etc. So usually the growth of any industry, AI, dot-com bubble, so internet bubble, and crypto needs space, needs time till they grow, mature more. Institutions and institutional capital is floating in, then regulators step in and start creating a laws just to start protecting the users, because the industry is growing big enough to start being regulated. So that's the first thing. And I believe that regulators will always be behind, because they are not interested to understand the industry to regulate if it's small. If it grows enough, then they start looking onto that, because too many people are involved, and usually this is also taxation stuff. So that's why you usually regulate. and that's the first thing. Second thing, because regulators will usually lack from being advanced enough to understand what's going on in the industry, like we have MiCA in Europe, and MiCA is not regulating DeFi at all. It's regulating the classification of the crypto assets only, and that's it. So they don't understand like all the world that is behind the just classification of the assets. So one of the most important elements is that industry should connect together to start speaking to the regulator and be a part of the regulatory process. So you know that we created the foundation with Binance, few other players from the market to speak with the regulator. The reason why we did it is to jump in front of the regulator and first educate them, to explain them what's going on. Second, so far regulations have been implemented on the crypto market without the market influence. So you cannot regulate the market without the market, right? So the market should speak to the regulator, having a voice that will tell, listen, guys, like we are looking for this, and this to be fixed. From your perspective as a regulator, the importance is here, here, and here. So let's try to match it together. We can work on that together. So the initiatives where, you know, under one umbrella, top players are going to be involved into working with regulators, educating them and helping them to understand the needs of the industry, because otherwise you don't want to kill the industry with regulations. You want to help them to grow, but within some frames and boundaries that are going to protect the users. Of course, taxation, it's always about taxation, and some elements that will allow big capital to feel safe enough to be in the space, because so far you got scammed plenty of times. I got scammed plenty of times. I believe Jing also have been scammed plenty of times. Everyone from us, all of us, had these problems. And after each scam, who you point a finger to and who you sue in the court? There is no chance today. But regulations are meant to put some kind of boundaries framework where you can find the people responsible for scamming you, where you can put them in front of the judge and try to, you know, recover at least a portion of the funds. If not, you will have some sort of you know, I don't know, jail or whatever for the people that are doing bad things. And that's going to be also something that will tell other people that are planning to do some, you know, bad things and harm other people not to do so, because there are consequences after all, right?
Yeah, so, taking the accountability, right?
Yeah,
and speaking of which, Paweł, right? Because right on this note, we are, you know, you mentioned AI, RWAs, you know, quant strategies and stuff like this. Of course, AI has been, especially on the AI agent side, you know, has been lately on mouths of I think everybody. I was in Davos just a few weeks back, and you know, when compared to the last year Davos presence, you know, when it was just preliminary discussions about AI, like how it's utilized, whether or not it could be used by corporate world and so on. This edition, this Davos here, the session was actually focused on the actual corporate implementation on the, again, corporate high-end level for the AI agents, right? So my question is, gentlemen, how the new technologies such as AI and for instance, quantum computing, how are they going to change? How is this technological advancement kind of like contributing to the change in the RWAs space, be it the public markets, the private markets? Jing, what would you say?
It's a good question. I mean, it's also a very broad question. Like, I think with the development of AI, and I'm just talking about the last 6 months, right? The number of things we have seen, even until the more recently, what is called DeepSeek, right? Like, advancements in that is mind blowing. Every week, every month, a new model is coming out that is just better and better and better, right? So if we talk about how it's influenced, let's not even talk about it. How is it influencing your daily lives, right? A lot of people, myself included, you stop searching on Google, you start searching on ChatGPT, right? So it's going to affect your daily habits. It's going to be, in the past, I'm going to Google something. Now, maybe 5 years from now, I'm going to ChatGPT something, right? And it's going to change a lot of the habits, all the way to using a lot of these things to write basic stuff like write code for you. In the past, you needed a whole team of developers, engineers to write a lot of things for you. Now, you probably still need some of them, but a lot of the more menial stuff can actually be handled by a lot of these things. So if we look at how it's affecting your daily life, your daily self, and then how you start to look at it in RWA terms, right? It's going to, in my view, make many of these things a lot more interconnected and a lot more efficient. So, or why I say that is I don't necessarily know what the technology on how it's going to grow within the crypto space, for example, because right now it's so basic, AI agents, right? Like the ability to achieve so much more is really up there. But what you can see is the ability for these things to automate a lot of the procedures, the manual work, the connectivity, to look stuff for you. And I think increasingly it's gonna save us a lot of time. It's gonna save us a lot of effort. But more importantly, from the technological standpoint, it's in my view exciting and mind-blowing on where it can actually take us.
I will jump in for a second because I was just having a keynote about that on one of the conferences, and the nice thing about doing AI and combining this with blockchain and crypto is that in crypto you have one universal underlying layer to exchange any kind of digital assets together, right? So imagine doing the same on traditional market. Like imagine doing like we are in the quant business, we are in trading business, right? So if we want to trade on Nikkei, Nasdaq, London Stock Exchange, and a few other ones, we need usually to connect to few different systems, integrate few different systems, maintain those integrations and everything on our side, which is a problem because that's increase the probability of something that will go wrong. And with tokenization and RWAs and having all these assets in one layer that works 24/7 is not having downtown issues like exchanges, right? It's allowing us for doing anything in there and connecting to one system and having access to Nikkei assets, to London Stock Exchange assets, to capital markets assets, CFDs, futures, whatever. We have one AI agent or 100 AI agents, but connected through the same connection. We don't need to maintain the connectivity because it's always there because nodes are providing the performance and that ensure us that the blockchain is working. And like Ethereum, Polygon, they don't have issues with operationality, right? So that way, we don't need to maintain 20, 50, 100 different integrations with different players to have these informations that feeding our AI algorithms. We have our AI algorithms integrated to one layer that have access to every possible asset to make decisions and change and swap between these assets in the real time, right? Within the block time. So this is why I believe combination of RWAs and AI agents, AI strategies, whatever, AI in general, will change a lot and will provide amazingly big possibilities for the future.
How
Because we are
about
removing whole unnecessary layer.
quantum computing though?
Quantum computing is a whole another story. So quantum computing is basically expanding capabilities of calculations by levels of magnitude, up. So analysis and whole, trading strategies and everything is going to be even much more competitive space very soon. But from the perspective of funds like ours, nothing will change because everyone will start using the same technology. Everyone will gonna be on the same page as we are today. So we will still fight with algorithms that are a bit faster than they used to be so far and have bigger calculation capabilities. But so I believe quantum computing will not change so much on that side because everyone will adjust to the new technologies. Most probably some players are going to be removed out of the equation because they're going to be too slow, but still the market is going to be saturated enough and it will look the same exactly still.
Jing, by the Jing, by the broad smile, I could tell that you have a point on there to make. So I'm pretty curious about that.
No, I mean, I think when you talk about quantum computing, the discussion should be just much broader than AI and crypto, right? Quantum computing, it's I wouldn't say it's new, but its impact is going to be much broader than anything else, right? Like with the advancements of quantum computing, like all your basic security, theoretically, the way it stands right now, can easily be broken. So there's going to be a lot of improvements and needed improvements on infrastructure and stuff. But because of these things, right, it's going to lead to, you can say, better security, better experience, better a lot of things, right? And then if we come into the specifically RWA/crypto space, then you would see a lot of the existing tech probably go outdated, in my view. But that would also lead to advancements in how should I phrase this? Like it would lead to advancements, right? Where things get improved, technology get improved. Will you see new blockchains? I don't know. But like it's going to change the basic, maybe not from a user perspective, but from an underlying perspective, it's going to change the basic fabric of what a lot of things are going to be doing.
Completely
All
agree.
right. So getting us a little bit closer towards the last part of the discussion, gentlemen, Jing and Pavel, I'm thinking in terms of strategic direction, strategic decisions. The future strategies that we're gonna be using basically for using those emerging trends, right? Because on one hand, we are talking again RWAs, AI, quantum computing. They are all fancy terms, and just like it is rightly so, Jing, they are very, very, very broad topics, and that brings that the application of those can be very general and very kind of like popular. It all just like you mentioned again, made a very good reference to Googling against ChatGPT-ing things these days, right? But let's focus real quick on those new kind of like strategies for and the new decisions, right? Because by 2030, again, we are estimating that the RWA is going to be closer to $70 trillion, right? That's 70 with an almost 20% annual growth rate. And while these are estimations, they are backed by an actual trend development. So speaking of that, what sort of future strategies? Is it only AI? Is it only AI agents? Is it only quantum computing? Is it a combination of both? Or is it some geographical kind of like direction strategies that the world should shift? Is it perhaps the Asian markets that the world should shift towards? What's your stance on that, Jing?
I think I see it in two ways, right? So if I don't talk about it from tech, I talk about it bringing assets from crypto out and assets from crypto going out and assets outside crypto coming in, right? If I look at it as basic as now, right now, a lot of holders of Bitcoin increasingly are holding it via ETFs, right? Bybit, your Fidelities and stuff. Would there be a world where you would want to tokenize many of these things and actually bring it on chain, right? So that is something like that can be done right now, in the next few weeks. And then the other example would be a lot of the tokenization that we're looking at right now, or RWAs that we're looking at right now, are equities, bonds, treasuries, and stuff like that, right? So then increasingly you're going to start to have, and you already have this kind of things where it's about cross-border financing, payments, and how do you actually facilitate many of these things and doing it either on chain or partially on chain. So we see many of these things growing, and a lot of this growth, I think, in the initial phase is going to be what's really happening outside crypto, and then bringing them on chain. But then, like what you said, the next steps could be cross geography, cross regions, how you actually tie them together. Because at the end of the day, when we talk about RWA and blockchain, the concept of geography doesn't exist anymore. The concept of countries doesn't really exist anymore, right? It's just a single state on the blockchain on how you move assets from one address to another address, right? So for a lot of these things, the traditional barriers, whether it was meant to be there or not, will start to disappear. And transactions in various forms, whether is it social score, whether is it credit score, whether is it everything, right? And I feel like it's not just about assets and trading assets. It's about much more than that that actually will evolve into this chart that you're looking at right now.
Pavel?
So, in my opinion, the big trend will come from tokenizing not only regional assets or something like that you asked, but in general, capital markets and the trend that all the big organizations want to jump into the space because of the very simple fact that scalability on many levels for these large organizations like JP Morgan stopped. They cannot scale beyond the scale they have today in terms of profits, etc. So what they are looking for is new ways to generate revenue, new ways to scale up as a business. And one of the ways is tokenization of the assets, because that's tradability 24/7. So simple words, tradability 24/7 are fees 24/7, because those organizations do not care about the prices. They care about the liquidity, the volumes. This is what they care about. So if you have ability to trade stocks from Monday to Friday, from 9 to 5, that means that you can trade 30% of the time. You cannot trade 100% of the time. So if you will allow everyone to trade 100% of the time, all the quant funds, everyone will jump into the space and start generating revenue just for free out of the air, just because they will have additional time to do so. The same with capital markets. They work today 24/5. Over the weekends, the capital markets, currency markets, anything are closed, right? So they're going to be open. Then this tokenization is opening another opportunity, which is called fractionalization. So let's imagine Berkshire Hathaway Series A stock, which is for per share cost of $800,000 today. Zero liquidity, zero. No one trades on that because one piece of that share costs $800,000. So if you will allow fractionalization and the average retail customer can have 1/8,000 of that stock and start doing transactions on that, that will bring liquidity to illiquid assets, which in result gives what? Transaction fees, of course, right? So this is what the deal is. And I believe that any kind of assets, like even illiquid assets like real estate, might start being tokenized and not put on the public markets, but on the private closed market, and also bring liquidity, which means transaction fees, etc. So financial institutions see that this big trend is allowing them to grow as an organization and put them on the new level. And like BlackRock is not able to scale beyond the scale they have today. So they are looking for new ways to scale up. And this new way to scale up is to allow to trade anything, anywhere, anytime, right? So that's my belief that the next decade will going to look like. So we will see a lot of regulation that will start allowing to do so. Then we will see a lot of big players that will jump in and provide platforms for that. Then we will see a lot of collaboration between crypto companies, etc. Like everyone today thinks that the crypto table has been set and the podium is there and no one can change it. Not true. Like I believe we will see this table to be flipped and the podium change all the major players a few times in the next decade, because it's so easy to do. And the proof of that is FTX. FTX was top 2 player in the crypto space. Within one day, they removed it out of the equation. Of course, because of some mistakes, etc. But that shows that this space is still very young. And as always, liquidity is the king. So the organizations and the companies that will be able to attract the most liquidity, they can overtake and flip everyone else and be like within a day on the podium, especially given the fact, if you will check the size of the crypto industry right now versus the whole capital markets and all the market in general. So this 68 trillion, almost 70 trillion, shows that, this potential is levels of magnitude bigger from what we have right now. So we are at the very beginning. So this, if someone thinks that the podium is set and Binance and other guys cannot be overtook by anyone in the space, and the kids that are building the startup in the garage, they are very wrong.
That's a funny reference. Let's put it. It brings me this Wolf of Wall Street kind of like a reference when they were building this. What is it called? Aerotine, something like this. They were building some whatever simulators in the garage. I don't remember. However, this literally takes me to this last reference, right? Because again, having those massive push towards towards the rise, I should say, of the RWAs. So last question for today, I want to leave our viewers and listeners with. It's a little bit of a food for thought, all right, for you, Jing, and for Paweł and for all the viewers. So having all those records, having all those trillions of dollars, right, having all those massive estimations by 68 trillion by 2030, best case scenario, then the 10% of global GDP, all right? So can we say that the RWAs, that the tokenized real world assets, is a new fancy word for gold standard? Is it a new gold standard, Jing?
Is it a fancy word for gold standard? I think the way I see it is, whatever we want to call it, whether it's RWAs or not, at the end of the day, what it represents the ability for society and the ability for traditional finance to be able to use this little tech that we call crypto, right? So whatever you want to call it, gold standard, RWAs, real world tokenization, and everything. At the end of the day, it's just how do you move assets around more efficiently? How do you move, like Paulo said, liquidity around more efficiently? At the end of the day, it's an optimization game, and this is what it's looking to solve.
So thinking about it, Jing, right? Just following up on this question, because of course the gold standard was referenced as simply using gold as a benchmark for valuation of any other assets and securities and so on, and to ensuring this interchangeability at any time, right? This is kind of like what RWA brings to an extent, if you think about it, right? It brings that you can literally trade, just like Pavel mentioned, it's Tesla stocks for an apple, right? For a bag of apples in a grocery store, or you can exchange your cryptocurrencies and buy how literally with it, right? Or you do it completely the other way around. You can sell your house, you can sell your car, put it on chain, and literally have Bitcoin in a matter of seconds, right? Secured and fully transacted and fully regulated. So it a little bit lines up, at least my eyes, I might be wrong. I like I've been many times before, that this interchangeability, this an actual means of an exchange, right? It brings me back to the gold standard, right? And when it finished in 1971. So Pavel, are we talking about this new gold standard? Are we talking about this new precedence of this interchangeability, this liquidity that is not been existing before, that is going to set the benchmark, right? Just the way the gold standard did.
So yeah, we can think about this as such a bit, because like, in my opinion, this is something that haven't been spotted ever at all so far, and this is the evolution of the capital markets on the scale that we haven't seen before. And I believe in the future we even can stop it calling a capital markets. It's just going to be the trading market worldwide. Because today we are speaking about public markets, private markets, on chain. Everything is just the market. Like, what is the difference of having Tesla stock on chain, which is a public asset, versus having tokenized hedge funds like ours, or versus having the Solv BTC on chain, or versus having this building where I'm at, Warsaw Spire, share on chain, which is the private market, right? What's the difference? You can trade it if the liquidity is there and it's interested to use that asset. That's it. So we will stop, I believe, because so far the diversification was public markets, which means there is liquidity and people can trade it publicly, so retail customers through brokers, etc. And private markets, where you need to go to the notary, sign the agreement to change the ownership of something, right? I don't know, this glass, this building, whatever. And on chain, this is removing any boundaries, right? Everything is going to be the public market. Anything you will put on chain is going to become a public asset that have access to all the liquidity that is on that market. And that's unprecedented change. So basically, there's no higher scalability where you put liquidity on any asset. Is it a real world asset? Is it an artificial asset? Is it a derivative? Whatever it is, you can have it publicly available to the wide audience worldwide. So far, we had these boundaries because it was on that exchange, or in that country, or in that country. On blockchain, there are no boundaries. Everyone, Chinese, European, Middle East guy, US person, can access such an asset and buy it or trade it or swap it to any other assets. Like, I can have my share in that building, swap it to the plane tickets, and I can do so because the market is liquid and is allowing me to do so. So I believe this is the ultimate goal that, in general, financial and any markets, any trading markets, trading swap markets, however you want to call it, were aiming since the very beginning, since where they were trading a rice for the apples, for the cows, for the any animals 5,000 years ago in some small village on the south of Asia or Europe or whatever, and to something that is allowing to gather the global liquidity, put it in one place, put assets there, and say, whoever is interested worldwide, please be my guest, buy my assets. This is the promise of what I give you. Behind that asset, that's it. And I believe this is way more than gold standard, because gold standard compared to that are pennies.
So the final tip from you, Jing, and you, Pavel, as well, for our viewers and listeners, because they the applications for RWAs go very, very broad, and not only the real estate, not only GPU rendering, you'd say, big data, of course, supply chain examples, those Bitcoin ETFs, those are just mere, I think very briefly, so just on the surface tapped, out of this entire potential. How can everybody position themselves early? How can they spot the trends, Jing?
Bro, if I know the answer, I mean,
Come on, try.
if I know the answer.
Let's try, man.
Okay, and anyway, let me take a step back. No, let me take a step back. But just
Do it.
now on the previous topic that Paweł was saying, like it got me thinking just now. If the day I can tokenize, let's say an orange, the fruit, and then I tokenize a Tesla stock, and then I create a Uniswap LP between the two of them, then we know we kind of have done it. You can pretty much trade whatever you want.
Yeah.
But I think if you talk about trends, it's really about, in my view, two things, right? Number one, what is the addressable market / target audience? What are you trying to solve, and what are you looking to address, right? If a solution is efficient enough to address a large enough market, then I think it's something that, in my view, makes a lot of sense to bet big and to bet early. Obviously, it's easier said than done, but I think that's how I will see a lot of things, right? It's about what are you trying to solve? What are you trying to address? Is that market large enough?
Paweł?
So my answer to that is basically what we do. Like, why we do this? Because it's early and no one is doing this kind of stuff. So tokenization of the quant hedge funds and the yields that are coming from traditional market on chain. So my answer is going to be the things that we do are my bet, because so far in the crypto, because of the low liquidity, like every yield that is being generated is very volatile usually, or is being low during the bear market because the fees are not there. It's being a bit higher during the bull market, but bull market is 25% of the time, etc., etc. So you have this beef all the time. So there is no stability in many regions. So that's why we are doing so. And I would not be surprised that everyone you would ask that question that is a builder will answer the same answer as I do. So that's why we are building X, because that's my bet as to get early, right, onto this kind of stuff, and to go a bit beyond my own bubble, which is my own business. I believe AI, of course, is going to be a big thing because it's growing everywhere, etc. And the table is going to be flipped many times. But the combination of AI with blockchain and RWA assets, as I said before, is going to be, in my opinion, a big thing, just because of ease of integration and ease of use, and removing all the unnecessary layers that you need to take into account today by doing AI. So you are removing a lot of operational overhead, and you can build a models that just have access to the market, and they do whatever they want, however they want, with access to the liquidity. But we need some time. And usually, if the people in crypto thinks that they get alpha and next day they will make 100x, not possible. They need to wait like half a decade or something for these things to happen. So if you want to get early today, wait 5-10 years, and then maybe you will get lucky enough that you put a bet on the right organization.
What do you mean 100x not possible tomorrow? Like you've just offended half of this industry, man. No, jokes aside.
I'm just serious, and I'm realistic. That's why the half of the industry is losing money, right?
Oh man, you're losing us views right now. It's blaming you. Anyways, gentlemen, such a fruitful discussion, and I merely should look at this as an opener to an even broader discussions that we're gonna have in the future, because having such an incredible opportunity to speak with Jing, CBO of Solv Protocol, and Paweł Łaskarzewski of Nomad Fulcrum on the CEO side, and having spoken with so many founders and people of high esteem, basically in this industry, the conclusion is one: the patience, the discipline, the foundation is going to survive, right? After all those crazy rallies on the meme coins and the alt season, it all comes down to normalizes, right? It all normalizes, it all destabilizes itself, it all comes back to reverts to mean, if you will, right? Mean reversion is there. Those profits that we all see in different markets are always, they come and go, right? And at the same time, our job is to observe and try to position in the right direction, and that RWA, from the hidden perspective, still, it seems to be one of the right directions. So, gentlemen, thank you so much for an incredible discussion. about the RWAs today. Jing, CEO of Solv Protocol, and Paweł Łaskarzewski, CEO of Nomad Fulcrum. Thank you so much, gentlemen. Such a great pleasure.
Thank you very much for the invitation.
Thanks for having us. Have a good day.
Thank you. And roll on to the next one. God bless.